And a new report's out on retail spending after being delayed by the government shutdown. The Commerce Department says U.S. retail sales rose slightly in September, 0.2%. That's below expectations, but the Commerce Department says it shows Americans are still willing to spend despite high grocery prices, rent, and imported goods hit by tariffs. ABC News business reporter Alexis Christoforous is here to break it down for us. So, Alexis, what does this report tell you heading into the holiday shopping season?
Well, again, this is a backward-looking report, right? It's from September. It came in lower than expected. So while people were spending, they weren't spending as robustly as they had been over the summer. And that could be a concern for retailers during this period, which is critical for sales going forward because it is the holiday shopping season. So when you dig into that report, it looks like people were spending a lot on gasoline, not exactly exciting. We were pulling back, though, on spending on things like electronics, clothing, sporting goods. Also, auto sales fell for the first time in about 4 months. And that's because a lot of people had rushed out to buy those EVs before those tax credits expired. But what we're seeing here is a trend, Diane, and that is higher income shoppers are doing the spending, and the middle and low income shoppers are feeling the strain of higher prices. And a lot of those high income earners are benefiting from a stock market that continues to hit record highs. So I think things are looking a little dicey on the retail front as we move further into the holiday shopping season.
So producer prices are also up 0.3% compared to a month ago and 2.7% compared to a year ago. How do you think this will impact the Fed meeting in a few weeks?
So this is interesting. This producer price index is all about wholesale inflation. So what businesses are paying for goods and services before we get them. What it's telling us is some businesses are able to continue to absorb the higher tariff costs. But at the end of the day, inflation is still closer to 3% than the Fed's 2% target. So what is a Fed to do when we also have evidence of a softening labor market? There is now the belief that the Fed will cut interest rates in December. There's about a 70% chance. That's where Wall Street puts it at the moment. But we could also see the Fed hold off, wait until the January meeting, and until they get more economic data, fresh economic data, to tell us better about where inflation is headed and where the job market's headed.
All right, Alexis Christoforous, thank you.